and just making an absolute killing on these trades. And if you've been doing that, you've been able to do that successfully in several springs as well. So it's been pretty good stuff, guys. There was another little spring that's just taken place there, and just going after that weak top edge, you can make a career doing this in trading. I mean, if you look at that trade, it doesn't look like much. If you started to sell that there at 13, 1:30, if you looked at that at 1:30, it's 1940. It's up to 1949 on 1, 2, 3, 4, 5 trades. I mean, if you couldn't have made $1,000 during that phase per contract, you'd have been pretty poor, wouldn't you? So you can see the idea of the interns exercise can be incredibly powerful if you just decide to adopt it. You know, it's not about being the smart arse that can call every top edge perfectly. Nobody can call the top edge perfectly. Commercials, you might think, call the top edge, but they don't. They call the top edge area. They don't top tick it. They buy or sell an area of price that simply makes it look like they've top ticked the price. They probably did top tick it, but they also top ticked 5 top ticks previously, or 10 top ticks previously, or 50 top ticks previously in the process of getting that top tick price. And this is why going with the interns, squeezing that weak liquidity at the highs makes an awful lot of sense. It's called the interns exercise. We'll be covering a little bit about that in Classroom this afternoon, guys. Well, it is a great trade actually, Jared. And the interesting thing is, so long as you get it on the the transition and you're not overpaying for price, sometimes it's better when you've got absolutely no value with you. Why? Because everybody knows that the value is bearish for gold, for example. So if everybody knows the value is bearish for gold, all the prop desks are now selling it. All the prop desks are selling at lower prices after the commercial sells at higher prices. And they're going to be putting in their stops aggressively. They'll be taking 1 or 2 tick stops against that story, wouldn't they? So therefore, as an interns exercise, you're basically taking the prop stops on. So if the value is right on the sell side, the buys actually work out even better because there's a lot more stops to run. It doesn't mean you're buying the top edge, it means you're buying the squeeze, right? Big difference. I would rather buy a squeeze of a level that's got a lot of value than buy a squeeze of a level that doesn't have a lot of value because there's nobody in that stop run. Know what I mean? Perhaps that's a little bit confusing for some folk. I mean, I'll buy a top edge if the value is bullish, and I'll sell a bottom edge if the value is bearish. But if you think about it, that just, for the squeeze, you're trying to take advantage of stops. You're trying to take advantage of the idea that a lot of people are starting to work the short side or the buy side. We'll cover it in Classroom again. We'll make sure we get through all these little bits and pieces today in Classroom. It is